Hello, this is Run the Numbers. My name is Jason, and the video you're watching here on the Run the Numbers channel is a great, exciting one today that happens to be part of the warm-up series. So that means we're in motion, we're on the go, we're walking down the streets of Los Angeles, California, and being on the go, in motion. Yes, it might get a little noisy, might get a little bumpy, but nonetheless, we're moving along. And the other thing about this video is that it's part of the 100 Videos Challenge. And that means that, in fact, being part of the 100 Videos Challenge, this video is one of the 100 videos that I plan to create and publish onto YouTube all in 100 days. So yes, I'm gonna have quite an aggressive pace of publishing videos to YouTube, and that's all done in an effort so that I create for you a whole lot of content, a whole lot of a library that helps you on your personal finance journey. So hopefully with that introduction now covered, we can jump right into today's topic, which is a good one because we want to consider the tax advantages of the rich. And now what I mean by that, what I want to focus by that is a couple of different things. Yes, I could have this video focus and go through the different strategies of how, by and large, wealthier individuals understand, have some financial know-how, have some financial sense, and do their best to legally avoid taxes. And they can do things with strategies like having a good amount of their income be from sources that are of a lower tax rate. So things like having long-term capital gains. Those have a lower tax rate by and large than some of the higher income tax brackets. Their strategies of having investments, assets that grow, that have tax exemptions. So I've talked at length about things like the treasury bills that I am very much a big fan of right now. So that's just one example of where there's tax exemptions, so lowering taxes there. There's also even just simply the strategies of, making sure to have residents to live in a state of which doesn't pay the state income tax. So you'll see a whole lot of headlines and news of, Jeff Bezos just moved to Florida, moved to maybe somewhere near Miami, for example. I'm not exactly sure where, but I saw some headline of, Jeff Bezos moving his residence to Florida. Now I think he already, so just pointing out, Florida, no income tax state. Along with, of course, there's a handful of others. There's a good many others, Texas and Jeff Bezos did live in the Seattle area, in Washington State also no state income tax. So as far as that, maybe that was all a wash. Who knows? I'm not going to speculate on one specific individual, but just point out, you'll see these headlines of various very wealthy individuals that on purpose avoid state income tax entirely. Okay, so you can find these various different strategies. I've also spoken at length about how it's advantageous to grow a lot of your wealth through gains in retirement accounts that can have the entirety of the growth tax-free, so something like a Roth IRA. just as an example. So there's a whole bunch of things like that to point to. Now, I want to just take a quick moment and mention something that I haven't yet covered, and that is to say there's just different tax treatment of individuals versus corporations. So you might have heard in a previous video or previous videos, I think I've said at length some various things that I say I've very much have been enjoying lately, rereading Rich Dad Poor Dad. And one of the things you'll definitely gather from that book, there's a whole bunch of ideas that you can gather from that book, but one is the repeated idea of legally avoiding paying taxes, and how corporations can do so because there's a different order to which the cash flow flows, in the sense of, if you're a corporation, you earn money, then you pay your expenses, and then you pay your taxes. Now, by and large, that's in contrast, and this is pointed out in Rich Dad Poor Dad. It's pointed out other places too. I'm just happening to point out Rich Dad Poor Dad just because, like I said, I enjoy the book. I've been rereading it lately. It's top of mind. But yeah, this is in contrast to just a standard individual income kind of tax treatment, and that is where an individual will earn income. They'll right off the bat, through every W-2, every paycheck that comes in, they're paying their taxes, and then from that they have their own individual expenses. They have what it costs them just to live in their and that could be in the form of course, discretionary income, and just all the various ways of what they're doing to just afford, getting by and living. So there's a different order to it. Now, obviously, you can, see right off the bat with the different order of a corporation versus an individual, you see right there, it's kind of blatantly obvious that a corporation has that advantage that, all things being equal, and of course that's the whole issue of it's not, but just the different order of paying the taxes after expenses can be very advantageous, and you could lower the amount of taxes. Now, you might be screaming at this at your screen and saying things like, well, but then, you pay the corporate tax, and then for you to eventually get money out of your corporation, whether that's in some form of payroll, or maybe it's in some form of a distribution, whatever it is, at that point you're getting taxed again. So are you really coming out ahead? It depends, of course. It's a good question. You could be screaming at that screen with quite good reason, but if you're doing it right, if like this whole video is centered around, if you have the tax advantage in your favor, being a wealthy individual and having the know-how, yes, you could do it in a way that, in fact, you're coming out much better in the end. Yes, if you're using the advantage of how the corporation is taxed versus the individual. Okay, so I just wanted to point that out. There's a lot going on into the story of how wealthier individuals, use the tax system to their advantage in comparison to the middle class and the poor, just statistically speaking. So these are things to consider. If you want me to dive into more specific parts to this, I'm kind of just scratching the surface. Please let me know, leave a comment, like the video, And of course, it always helps whether you like this kind of video or not. Go ahead and subscribe to the channel, and that would help me out. Tell it to your friends, all this sort of thing. That way more people can enjoy this content that I create. All right, I'm gonna leave you there. Hopefully this has been just at least a helpful thought exercise that you can go through and have it helpful for you right there. Okay, gotta run.